Morning, Market Chameleons. Happy Monday. Morning, Dima.
Good morning, Will. How are you?
Excellent. Let's jump right into the disclaimer, my friend.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're not giving you advice. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions, provide you with guidance.
Excellent.
There's the disclaimer.
You see anything in the pre-market this morning?
Let's take a look. I was just briefly scanning it. So I think what we'll do today is go over the pre-market report. And there's a new feature we pushed out last week. It's a peer comparison feature. So it's a tool that allows you to take a stock, pick some similar companies to compare it to, and kind of run a side-by-side analysis. So we could go over that unless we have any questions popping up. If we have questions, I'll try to get to those first and to as many as we can before the end of the show. So
move ahead.
That, let's get started with the pre-market report. And these are stocks moving in the pre-market hours before the market opens. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to first take a look at what's going on in the higher market cap stocks. So let's take a look at 20 billion market cap or higher. So I'm using this filter up here. So one thing we see is 62 made the percentage gainers list. Only one made the percentage decliners list. From that perspective, looks like a much more bullish bias at the open. Tesla made the top of the list. I know that some good news in that stimulus package for those electrical vehicles. I think they're going to start building the part of the stimulus is to build electrical vehicle stations where you could charge your cars. So that could be a big boost for these companies, especially in electrical vehicle space. So they're up 7.4% here. These are some other headline news I'm hovering over. I don't see anything else, right now that's popping out at me concerning Tesla. This is Roblox. They just went public, right? Like when 2 weeks ago, something like that.
3 weeks ago. I think that was, well, actually, I shouldn't say. I think it may have been a SPAC, but yeah, but the stock just became able to trade just in the last couple of weeks.
And what is this, like a video game? I think my son plays, he mentioned this. Somebody gave him like gift cards for this game. Roblox.
That's exactly what it is. It's a game that has a social aspect, so you can chat with your friends. You create a little humanoid that you walk around. My daughter builds houses, schools, that type of thing. But it's an interesting game.
So it's a game for kids, basically. It's like a game for
children that has a social element where they create a profile, they communicate with other people who have profiles.
Wow. So there you go. So here, up 5% in the pre-market hours. Just look, basing it on my son and what he says about it, and actually I think my daughter also plays it too sometimes with her friends. So it seems like a pretty addictive game. I don't know what you think, but
it's totally addictive. And they have a not that it's a cryptocurrency, but they have a currency element where they call them, I think, Robux, or where you have to buy these to buy extra goods and services within the game.
So it's like a digital token that works.
It's not. It could certainly be a digital token. They just give it away and you can buy it and it drops into your account. But they could digitize it, certainly, if they wanted.
That's interesting because I've been reading more and more about these digital tokens, and maybe I'll start mentioning some of them as I learn myself, how this technology is progressing. And there's lots of interesting things, there's after like 10 years of Bitcoin and the blockchain technology, and then you got like Ethereum working on platforms, they're starting to come up with actually pretty creative and interesting technologies that I think could be like really big disruptor. I mean, they're already in some ways disruptors, but they can become big disruptors in the industry. So it's not going to be just like monopoly money moving around, but building utilities behind it. I mean, we saw the NFTs, but even beyond the NFTs, just the speed of the transactions and how you could transact globally using this technology it's kind of amazing, some of the things that they're working on. So maybe we'll start, here and there mentioning some more about those blockchain technologies.
Yeah, actually, one of the chameleons, Abhishek, mentioned that he sees it as super popular, I guess, in his family or community as well. Actually, Robert from Chicago just mentioned Tesla had 11% increase in sales in China, but they also lowered the price something like 18 times. I guess he means the price of the vehicles. So CNBC maybe is reporting the euphoria in Tesla's overdone. I find that maybe interestingly hard to believe. It's good. Yeah. Seems like it could go to 4,000 or, less. Who knows?
Or lower from here. Right. I mean, look, it's up at 710, I think up $50. They sold off, I think, down to what, the low 500s. They're still off their high 900, but this is now going back and forth. You got shorts in there, making their argument. You got longs in there making their argument.
Actually, speaking of longs, Robert also mentioned Kathy Wood. She must have been on CNBC this morning. I may have missed it. Yeah. Says, and she said this she said this a long time ago, but she says she sees Tesla will go into 3,000 plus. A bunch of chameleons chime in. Of course she does, because, she's got a huge position. Actually, as we're mentioning Kathy Woods, we did have a question earlier on from Ray, who was, because I mentioned the new comparison feature you were going to do. He was wondering if you could compare the ARK funds. I don't know if that's an option in the comparison.
Yeah, this one, the comparison right now that we have available is looking at just the stock, individual stocks. I'll show you what I mean, but this one focuses on fundamentals on just individual stocks, and not the ETFs right now. So the feature that I'm talking about.
All right.
But that would be an interesting comparison. Obviously, these ARK funds, I think they have different focuses as well. Like on and it's an interesting perspective that she has. She's very focused on the growth and the future and visions that things that we don't see yet, right? You're not gonna feel this type of technology until it happens. So that's her kind of, and she's very close to these, by the way, people in the technology space. I know she's very optimistic, very bullish, and she's got these really big or high expectations for these stocks with target prices, 200, 300, 400% returns. But she goes in there and I've seen her interviewing Elon Musk. I've seen her talking to these people, and so she's out there in the field. She's not sitting in an office like a lot of hedge fund guys and just crunching numbers. She's actually going out there, talking to them and trying to get, information about what these companies are doing from the CEOs and people close to there. So that's interesting. But let's take a look, just to save some time now. I'm going to look at the unfiltered report here. So even here, 242 made the percentage gainers list, 36 on a percentage decliners list. Only one sticking out, maybe that, GameStop, GME down 9.5%. I think that they're going to do a secondary offering to raise money. So they're going to, I forget how many shares it is, maybe 3.5 million shares, something like that. So they're going to take some advantage of these higher prices right now, raise some money. So that's down 9.5%. Nothing else is jumping out at me. So I will go to the new feature unless you have some questions. Will popping up.
Nope. Go to the new feature, my friend.
All right. I'll start out. I'm going to use maybe Facebook as an example here. So here I'm on Facebook, and I'm going to go here to the fundamentals, and this is going to be a peer comparison. So what I'm going to do is take a look at Facebook versus some of their competitors, right? Some of their peers, and see and just kind of compare side by side how they're doing fundamentally, growth, valuation, and performance. So since we're starting out with Facebook, what we'll need is to enter some some stocks here that we think are in a similar space. And you could go down here if you just wanted to look for suggestions, and you could do these drop down lists that kind of has them grouped by industries, by SIC code, NAICS code, where they try to group similar stocks and similar industries. Let's just stay on this one and just pick some out. So, for example, and you could read them over here. So you have a list of stocks, price, market cap, and then kind of look at description about. So if you're not sure, you could hover over and just read what they do. But I think we all know what Facebook does. And some of those that stick out maybe is like Snap to me, Twitter, Pinterest, maybe some similar stocks. Some of these, I don't know, it's kind of a judgment call, like if Zillow or, these, if you want to compare them. But let's just take a look at, Snap, Twitter, Pinterest. So I'm going to just type them in here, Snap, and it's going to start, comparing these different categories. Let's do Twitter. Let's do Pinterest. Any other ones, Will, that you could think of?
Did you say Facebook?
Well, Facebook is So
we're you're comparing them all to Facebook. I got you.
I guess this would be good enough to show as an example. So we got Facebook here, right on this side. That's our that's the core company that we're going to be comparing to those peers. And we'll start out with, its market cap. You could see revenue, cost of revenue, gross profit. These are coming from the income statement, operating income, net income to shareholders. So this is how Facebook's numbers. This here, the median, it's taking the peers that you enter and taking the median value. So, when we see raw numbers, it might not mean as much as when we start converting these like to percentage comparisons. But if you just wanted to compare raw numbers, it defaults, the graph here defaults to the top one, but you could change it. So like, so here we have revenue, but what if we wanted to compare, their gross profits? So we could see Facebook's gross profits are way higher than any of their competitors.
Hey, D, can we add one more? We had a request from the Chameleons. It came in because of the delay a little late. Is it too late to add one?
Which one?
PLTR, Palantir?
I don't know if that's a direct competitor to this, but I'll add it. And again, if it's, depends how much data there is, if it has very little data, then it might not be as good. I think this one's looking at this specific report's looking at the latest one, but I just added it here. PLTR.
Yeah. So it is easy to add. All right, great.
Yeah. Net income. So you could see a lot of them are losing. Facebook is making here. Operating income. So difference between operating income, net income. Operating income is income that's coming from their core business, right? So it's excluding any type of other income they're making from investments that is not directly due from its core business. So if they made investments in stocks, bonds, digital coins, whatever, that's not included because that's not part of their core business. So let's now, so these are the raw numbers. And a lot of people actually, like, their argument with Tesla is like, look at Tesla's revenue. We could take a look at it too. Like, their revenue is much lower than their competitors, although their market cap's much higher. So that's like one of the shorts, argument. But
it's hard to compare Tesla to other car companies because in theory, it's so much more. That price target that Kathleen Woods has of 3,000 isn't because they're a car manufacturer. It's it's their whole technology and their infrastructure and everything they're doing.
I think what she, she points out, they're more of like an energy company. So they look at they create technologies to generate, store, and distribute energy, right? So it could be even in the utility industry that they're targeting solar energy. On top of that, I think that they have technologies to build autonomous driving.
Yeah, that's a big deal. I know when you look at their car and put down money,
Yeah,
you pay, I don't know, 20% more if you want the autonomous driving feature. So
yeah,
you can imagine all of that is they have patents on those processes. They've
yeah.
done more road work than anyone else.
And that's potentially something they could license out to
Yeah,
other
for
vehicles, right?
sure.
So
For sure.
that's there. For certain, there's a big potential there. That they and he's very innovative. There is big potential there. Like, it's hard to put a price target on something that we don't see yet, right? It's brand new, so it's hard to put a target on something that hasn't existed before and is brand new. Um, so let's come back to this. These are the raw numbers. So the raw numbers, sometimes they don't tell you that much. So let's convert this to a percentage statement. So here I'm going to look at these numbers, and we're going to look at it as a percentage of revenue. Okay, so let's click onto this tab. So here we see, for example, all these below, these income statements is converted as a percentage of revenue. So revenue divided by revenue is 100%. Then we have cost of revenue, gross profit. So let's take a look at gross profits. I'm going to click on this to bring up a chart. So here we see that in here, the clear winner is Facebook. 80% of their revenue, they convert to gross profits. In other words, for every dollar in revenue they generate, they keep 80 cents, before other expenses like salaries and stuff, but it just costs them 20 cents, to make that dollar. So 80% revenue, much higher than, you could see the median here, 64.3. So here's Snap, 52%. And these are all pretty healthy gross revenues. Even at 52%, that's not bad. So this, at least from gross revenue, gross margins, all of these look pretty good. Even the median, 64.3. I'm going to jump, not to go through each one of them, but we could also compare, well, how much of their, what percent of their revenue are they reinvesting in research and development? So we could see here right now, PLTR, they're reinvesting 54% of their revenue into research and development. That's higher than the median group. We see Snap also higher than the median. They're 43.9%. Facebook here, 21.5% of their revenue, they're reinvesting research and development. And look, these are percentage terms. Probably in notional terms, Facebook, here we could take a look here. So in notional terms, Facebook's, in just dollar terms, they're much higher than anybody, 18.4 billion, just because they generate so much more in revenue. But as a percentage of revenue, this is what it looks like. They're 21.5% versus the median group, 39.9%. Operating income. So this is how much do they keep from their revenue? How much profit are they making from their core business? So here we see Facebook, 38% operating margins. That's really good. You could see their competitors right now still struggling, on that front. In the last trailing 12 months, they're all in negative, right? Net income to shareholders. This is just total net income, including anything they made from their core business and non-core business. Here we see 33.9% margins in Facebook. All these other competitors so far in the negative. All right, so that's from that perspective. What about growth? Who's growing faster? So let's look at year-over-year growth. Let's start out with revenue. So on the revenue side, we see Facebook, 21.6% last year they grew their revenue. The median for the rest of the peers, up here, 46. So you see Twitter not so high, the other two much higher. So Twitter probably, grew their revenue 2.2%. You could see the rest of that group grown much faster. What about gross profits? Who's grown their gross profits? So here we see Pinterest, Snap, gross profits grew year over year over 60%. Facebook, 19.6%. Twitter, so far not so good. Their gross profits were down when we compare year over year. Operating income, net income, because the rest of the group are negative, there's not really anything to compare it to. There's no growth yet. You'd have to have positive earnings to really compare that. After year over year growth, let's look at their yields. So this is converting everything to percentage of market cap. So the ones here that I look at is probably, let's take a look at operating income. And what this is doing is saying, well, if I bought the entire company, it'll cost me this market cap, right? And I got to keep all the operating income. So all the income from its core business, I got to keep. What is my yield? What is the percentage return? So I'm looking here at the operating income. So we could see here 3.8% in Facebook. And the other ones are actually, so far not making money from their core business. So that's how that compares to this group. All right. Gross profits. Let's look at just gross profits. So gross profits, Facebook yielding 8.1%. The median for the rest of the group is 2.1%. Next high is probably Twitter, 4.3%. But if we compare these two, Facebook is definitely, killing it on that front. So any questions so far, Will?
No, you're good, dude.
All right. What about performance? How did these perform, if we compare it to the same time frames? So let's take a look at 3 months. So in the last 3 months, here's the performance. Twitter up almost 18%, Pinterest up 18%, Peloton down 2%, Snap up 8.8%, Facebook up 9.3%. So as from the performance, you could see which ones are outperforming on a 3-month basis. Let's do a 1-year basis. 1 year, we got Pinterest up 450%, Snap 386%, Twitter 173%, Facebook 87%. So they all perform really well, but you could see here that these Snap and Pinterest definitely clear winners on a 1-year basis. We could go back further, but some of these probably haven't been public long enough, to do a comparison. If I go to 3-year, this is on a 3-year. Snap 234%, Twitter 120%, Facebook 87%. So that's really quickly how they measure performance. Valuation. If there are no questions, I'll go to the valuation part. Okay. Price to sales. So this is how if we take the market cap of the stocks divided by the revenue, how much, what's that ratio? How far away, how much more are you paying over its revenue? So here we see Facebook is trading 10 times its revenue, right? Versus the rest of the peers around 24 times. The highest one, 31.65. So the higher this number, the more the higher valuation you're giving it above its revenue, right? So how much are you paying above its revenue? So for every dollar in revenue that the stock generates per share, in this situation, you're paying $31 in Snap for that to receive that dollar in revenue. Think of it this way, per share. So Twitter, 13, Pinterest, 27, Peloton, 20. So, out of all these, you could see Facebook, the biggest one, but on a valuation basis, the lowest multiple out of the price to sales. Let's take a look at price to EBITDA. So these are earnings before interest, taxes, and depreciation. And really, we only have Twitter and Facebook here. The other ones don't have positive earnings, so it can't generate a multiple. But Twitter, 100 times its EBITDA. Facebook, 21.5 times its EBITDA. Okay, so that's earnings before interest, taxes, and depreciation. Forward PE. So this is the PE ratio if we take earnings consensus going forward for 1 year. Okay, so these are estimates based on analysts that are covering these stocks. And if we take their forward estimates, instead of the trailing 12 months, we look at the forward ones. How do those PEs look like? So that's already including an estimate of growth, right? So they're projecting 1 year's growth. So we see here Facebook 25 versus these Snap 476, Twitter 65, Pinterest 84, TWTR 156. So we could see here these are pretty richly valued, right? If you could see these competitors. So you'd have to see pretty big growth, I think, in these companies, even more probably than the analysts are suggesting. Payback. So we can't even generate for most of these competitors. It's, these are using analyst expectations, but we can't even generate anything here because they're not giving us, the earnings are just not positive yet. But the idea behind payback is if we gave it a certain constant growth rate in earnings, right? If we said here are the earnings and we gave it a constant growth rate, like whatever it would be, 10%, 12%, 15%, whatever the analysts would be expecting, how many years would it take for those cumulative earnings to pay back today's price? So we see here, Facebook, it's 8.34 years. These other ones we can't generate anything from. So, obviously you could, once you start changing these assumptions, you'll get different. I think we could also compare it to Google and Microsoft, right? Facebook, Google, Microsoft, they're also kind of.
Actually, Ray was asking if we could compare Amazon, Walmart, and Target, maybe for another day. I know Vlad just came in and he was just wondering how you got to the whole screen.
Yeah. So again, this is a new feature. If you go in and type in, like, here, I'll just go, if we do Amazon, right?
Amazon, Target, and Walmart, they wanted to look at.
So in Amazon here, you go under fundamentals, peer comparisons, right here. Under peer comparisons, it'll automatically, populate the stock that you're on. So here I'm on Amazon. So that's the first stock that it populates. You could start, if you already know the symbols, you could just start entering them in up here. If you want to look for other ideas down below, we just kind of created a list, and you could have your watch list, but we created 4 different lists. One is comparing them. 2 of them are coming by how Morningstar groups them. That's where we're getting our data from Morningstar, but also by SIC code and NAICS code. So you could go through them and just kind of to get ideas. You could start like looking through to see, if you find any direct competitors. But you said Amazon, let's see, Walmart.
Yeah, Ray was asking for Amazon, Target, Walmart.
Target, Amazon, Target, Walmart, that's it?
Yeah.
So here's how their market caps look. Amazon way higher, right? If we wanted to compare revenue, Walmart's revenue is still higher than Amazon's. So Walmart generating 559 billion versus Amazon 368 billion. What about operating income? So operating income, Walmart, Amazon, tied, Target still down here. So it needs to catch up. Net income to shareholders, Amazon executes better there than all three. What about as a percentage of revenue? Gross profits, Target 29% versus Walmart 24, Amazon 24. So those are gross profits. Operating income as a percentage of revenue, 5.9% in Amazon, Target actually 5.5%, Walmart, 4%. Obviously, Amazon has other things in there going on too, technology. Net income, that's what it looks like. Target, Walmart, Amazon winner here. Let's look at the growth. So let's look at revenue growth. So revenue growth, Amazon last year, 37.6% versus Target, 19.8%, Walmart, 6.7%. So this is where really Amazon shines, right? Growing their revenues. Gross profits, Amazon grew their gross profits 26%, Target 17%, Walmart 7%. Operating income, this is year-over-year growth. Amazon increased it by 57%, Target 25%, Walmart 9.6%. So that's showing you, how fast they grew last year. Let's take a look at their yields.
Just so you know, it's 9:30. We had a quick question from Ivica. He's asking, is this feature going to stay for stock? If you're just a stock trader, is this a feature that's going to be available for that premium?
For the stock, yes, this should be available for the stock premium users. So it'll be all the, I think it's available to, stock total access. We might have made it available to the other ones too, but definitely for the stock and total access, this is available.
Awesome. Great job, Dima. It was a full webinar of a new feature. Very cool. Thanks, my friend.
Awesome. Thanks, everyone. Well, stay safe out there. Have a good trading day. Hope to see you guys tomorrow.
All right. Trade in peace, chameleons. Have a great day. We'll see you tomorrow morning. Bye.
Bye, everyone.